All right, ladies and gentlemen, this is Blake Morrow. You are listening to the Daily Roundup webinar. Hope everybody's having a decent trading day. You know, it's been kind of sloppy, but I think some pretty key developments are happening right now. So let's talk about the euro dollar and kind of where it's at. The euro, and if you guys got, if you guys are reading the updates, like the euro dollar update from an hour ago. I posted this chart at 113. We were trading at 113.12, basically where we're at right now. And my 2 cents is we're outside of the flag parameters now. So we're outside of the bull flag pattern. So for right now, the market is bullish. Now, I know this candle, you might be looking at the 4-hour candle going, wow, that's kind of an ugly candle. It is, but that doesn't mean that we can't consolidate around here for now, above 113, maybe slightly below it. But I believe while we are here, we're at these levels, the risk for the euro to continue to rally is pretty high. We are pulling back a bit intraday. So let's go over to a 15-minute chart and just so we can see kind of an intraday perspective where we're at. We're probably close to a 38% retracement. 38% retracement right now comes in at 112.97. So we might, the way I could actually see this playing out is we could dip, break below 113, test the 38% retracement, and then bounce right back. All right, so there's that's what the euro looks like right now. The cable, it's pretty sloppy. The pound's still holding below the 50% retracement. I still believe that if we get above this 50% retracement at 125.30s, that would be pretty bullish for the cable. With the euro trying to break higher, I think this is a risk. I know the pound slipped a little bit here, but I still think it's a risk that the cable does try to continue to move higher based on what we're seeing with the euro. The Aussie, just when you think that the Aussie is going to be a false breakout right here, we ripped as the NASDAQ, probably following the NASDAQ, as the NASDAQ hit all-time highs. And the Aussie is holding up pretty well. Remember, the RBA is tonight. We aren't expecting the RBA to move at all on interest rates. I don't think it's going to be much of an event for the Aussie, which is important because I don't think it's going to be derailing the Aussie rally as of right now. But I think the Aussie and the Kiwi are both at risk of screaming higher. If the euro breaks out or continues this breakout higher, especially if we get above 114, actually for the euro, it's really right now I'm more concerned with 113.50. But if we break above like today's highs, we break 113.50. I think the Aussie, the risk of the Aussie breaking this 70.50, 70.60 level is quite high, and the Kiwi too. The Kiwi is at the multi-year trend line. I've kind of been in and out of the Kiwi a couple of times today, but you can see we're consolidating gains, and I missed this. I was going to buy the dip here at 41, and I kind of missed it. I wasn't paying too close of attention. But the Kiwi is holding up really well, and the fact of the matter is this is a multi-year trend line, and if we break above 66 cents in the Kiwi, I don't see anything stopping it near term, other than obviously if equities go the other direction, then we might see a reversal there. But for right now, we have to assume that this breakout is real, or it's got the risk of being a real massive breakout. The one thing that does concern me about the Kiwi and the Aussie as well is the Canadian. Dollar Canadians, it's slipped, but we're holding what I think is channel support, which again, this is, if you guys have basic technical analysis access to ForexAnalytix, you guys know most of this, but I think that this 135.20 is pretty important, or the lows today. We start breaking through the lows in the Canadian, I think that might be the clue that, hey, maybe the Kiwi and the Aussie are ready to go, because we're already seeing, the dollar Mexican peso bleed. And I talked about this during the face webinar. This is an AB equals CD move. And the reason why this is a has potential of this, it's obviously not going to happen in one fell swoop, but the fact that the dollar MEX stopped at a 38% retracement means the risk of a continuation pattern is quite high. So, if you look at it like a pennant, I mean, that's a AB equals CD, which would take us back to 19. Basically, the whole move where we started would disappear, like all gone, right? I think that's a risk for the peso. And with stocks as strong as they are, I know they've come off a little bit off their highs, but look, the Nasdaq's at all-time highs, and it's bullish, and it's continuing higher. It's really hard to be. It's hard to be bullish the dollar when you have stocks that continue to blast higher. I mean, the S&P is still looking like we're going to be trading up towards 3,400. Where does the dollar go as a result? Obviously, with the euro, we have a pattern in play. If you missed it, I am long some euros here. I'm looking to add. I'm actually looking to add above like 113.50, and then adding a little bit more above 114. Should this all happen, because this bull flag pattern will look like this, because this is the low of the flag pole, right? Goes to the low of the flag previously, which points us to 118, or just around the 118 level. And let's see if I can do something else for you. So let's take this high to low. 127% extension of this move comes in at 117.34. This is post-pandemic move, or as we found out about the pandemic type of move. So that to me seems realistic, especially if we start breaking out. So again, I'm just trying to lay out the idea for you that the euro has a lot of room to rally, especially if we start breaking higher. Not doing anything with the yen. Nissim asked about silver. So let's talk about precious metals really quick. Gold's bullish, and silver is too. So silver held right where it needed to hold. I mean, this is pretty technical and pretty, this is, again, I just want to point out, this is exactly what silver had to do. Rallied out of the triangle, tested the highs, came back, retested the breakout point, rallied back. And so what's really key at this stage in the game, Nissim, is that we break above here. We break above this 18, let's just call it 1840, because then we break above that. Then we challenge the channel resistance that comes in at 1950. And then above 1950, it's, that's when you start looking at, in the 20s and maybe even in the 30s, right? That's when you start thinking big, longer term retracements. 38% retracement comes in at $25, 50% retracement at 30. So, there's a lot of room here if silver goes. And look at gold. Gold does not want to back off. I mean, yeah, I know it's up a little bit today. And yes, it's not like explosive, but that doesn't mean it can't be. And that doesn't mean it won't be. Gold is near. We're near the highs of the year, and we are near. Let's see, when's the last time we've been up here? We haven't been up at these levels since 2012. So we're basically at 8-year highs if we start hitting new highs. And the last that I remember, when you're hitting 8-year, 10-year highs, divergent or not, it's bullish, right? So when you hit new multi-year highs, that is a bullish sign. So try not to get squeezed. And I keep warning people about the risks associated with being short gold, because this is if you just remember, this is when the Fed started expanding the balance sheet post-financial crisis. You see what happened last time around. How about if we do something similar here? I'm not saying that it's going to be this big of a move, but why can't we go to 3,000 or just shy of that? So just again, be really careful if you're short. I think these precious metals look pretty bullish, despite being divergent and all that other fun stuff. All right. Rick said SP obviously had some resistance on trend line from the all-time highs to highs in June. Pointed out somewhere before, I'm not sure. Breakup from here would be important or notable. Let's take a look. You're talking about S&P, right? So let's. Oh yeah, I guess so. Let's take these this all-time high in the S&P here. We're getting close. So yeah, a break above 3,200 would be, I'd be pretty bullish, man. Dimitri says, I just see the EU July lows to today is equalized. So euro dollar to July lows. Oh, you're talking about this. I mean, yeah, we may stall here. So there's that to that. Yeah, it's equal. It is. And you know what? We stalled perfectly. But that's over. It's over now. So now it's resetting, right? I think that the euro has the potential of squeezing pretty hard, right? But all right, guys, if you are listening to this after the fact, sorry, my office is so loud. If you're listening to this after the fact, that means you're probably not a ForexAnalytix subscriber. So make sure you join in. It's only $1 for 10 days. For those of you that are ForexAnalytix subscribers, thank you so much for all your support. As always, I look forward to seeing you guys in the chat room. And thanks everybody for tuning in for the Daily Roundup. And I hope you had a great long weekend. I'll talk to you soon. All right, thanks.